Welcome back, Trinidad and Tobago. And Sarodh is standing by to let us know what's happening in the world of finance. This morning I read something interesting. It talks about this is a new week. Don't talk yourself out of your goals. So if your goals are to make money, I hope that Sarodh is going to give me the key to doing that through the world of finance this morning and tell me that there's going to be some good news. But I know that markets seem to be on the rise. Some companies are, slowly recovering. We're still in this new norm. But the expert is here to tell us what's happening. Sarodh, good morning. I hope you had a wonderful weekend. What's happening this morning in finance?
Good morning, Emma. I hope your weekend was wonderful as well. And good morning, Trinidad and Tobago, and welcome to the Bourse report. Well, things are certainly on the uptrend right now. Oil prices are hovering around $40 a barrel, which is in stark difference to just around a month ago when oil prices were in negative territory. International equity markets have recovered pretty much all of their losses that were incurred at the height of the pandemic and seem to be on an upward trend as well. And locally, things seem to be recovering slowly. The economy is reopening, and we do expect some negative news in terms of second quarter performance. But again, that would all be historic as we move into the future and things begin to improve slowly. So today we're taking a look at the manufacturing sector. In particular, we're talking about Whitco and Angostura for their first quarter results ended March 31st. And we'll turn firstly to Whitco, and for that March 31st period or first quarter of 2020, Whitco would have reported earnings per share of just around of 42 cents, which is a 5% improvement from that 40 cents recorded in the prior comparable period. Now, revenues were up just around 2.5% from 227 to 232 million. Gross profits were also up just around 2.6% from 176 to 181 million. Overall, profits for the period were up around 4.9% from 100 million to that $104.9 million mark. Now, in terms of growth, it has been a slowing trend. And we can see in the first quarter of 2018, there was 9.7% growth in revenues, followed by a 20.9% increase in the first quarter of 2019. And of course, the first quarter of 2020 with just around 2.5% growth. Nonetheless, the upward trajectory for that revenue line continues for Whitco. And from a profitability perspective, Whitco continues to do an excellent job in terms of maintaining its key profitability margins, with gross profit margin in that blue line continuing to increase over the past couple of periods, currently at 77.9%. And the all-important profit after tax margin line also improving significantly from just around 38.6% in the first quarter of 2018 through 2019, and that currently stands at around 45.1%. So from an efficiency perspective, Whitco continues to tick all the boxes and is seemingly on the right path to improving its business and its profitability. Now at a price of just around $37.51, and it is important that investors note that the stock price of Whitco has been fairly volatile, trading between $32 and $37 or $38 in the past couple of days, and coming from as high as $46 earlier or $45 earlier in the year. So it has been quite a volatile period, but at the current price, Whitco is trading at a price earnings ratio of around 22.3 times, which is pretty much smack in line with the sector average of around 22.2 times, and does offer a trailing dividend yield of 3.2%, which is above the sector average of 1.4%, and that's despite taking the prudent decision not to pay a first interim dividend, whereas they would traditionally pay a dividend in the first quarter, after the first quarter, and investors tend to hold Whitco stock for the very, very attractive dividends that the company pays. But with improving cost containment measures, however, very cognizant of that COVID-19 impact, and the second quarter will certainly shed a lot more light in terms of what we can expect in subsequent quarters from a demand perspective at the very least. Bourse maintains its neutral rating on Whitco. And turning to Angostura Holdings Limited, for that first quarter ended 2020, the group reported an earnings per share figure of 6 cents, which was a 20% increase, a very commendable 20% increase from the 5 cents reported in the prior comparable period. Now, revenues were up a whopping 11.5%, which is quite a very healthy increase from 137.4 million to just around 153.1. And the group did a very good job at containing cost of sales or cost of goods sold were up just around 3% on average, and that led to an increase in gross profit margins of 21.3% from 65.2 million to 79.1 million in the most recently concluded period. Overall profits attributable to equity holders, that is you, the shareholder, would have increased 20% from 10.9 to 13.1 million. Now, from a segment basis, we have operating results, and we can see that the rum segment actually declined from 11.4 million in the first quarter of 2019 to 8.3. And interestingly, the bitter segment would have almost doubled from 5.8 million in that first quarter of 2019 to 11.9 million in the first quarter of 2020. The LLB segment actually improved quite significantly on a percentage basis from 0.6 million to 2.2 million. And the bulk trading segment actually swung from a loss of 0.3 million in the first quarter of 2019 to 2.6 million in the first quarter of 2020. Now, as we take a look at the gross profits and profit before tax margins of Angostura, we note a nice upward trend. Now, in the first quarter of 2017 and 2018, there were differences in accounting treatments, which was subsequently shifted from fiscal 2019 going forward. So we just take a look at the first quarter of 2019 and 2020, and we can see stable profit before tax margins in the vicinity of 13%, and their gross profit margins of the group has increased quite healthily from 47% to 52%. So all in all, a pretty good report and scorecard for Angostura. On a forward-looking basis, at a price of $14.14, and that price has remained fairly stable over the past couple of trading periods. The stock trades at a price earnings multiple of 20.6 times, which is below the sector average of 22.2 times, and offers a marginally higher dividend yield of 1.8% compared to that 1.4% for the sector. Now, on the basis of improving earnings and fair valuations, but again, very cognizant of the adverse economic conditions which are being brought about by COVID-19, we have to take a look at what subsequent quarters will do in terms of impact in demand for what is not necessarily considered by most people to be an essential good. Bourse maintains a neutral rating on Angostura. But that's it for this week's edition. For more information, you can give us a call at 226-8773. Or to Bourse, you can check out our website at bourseinvestment.com for all of this research, which is absolutely free on our website. And you can also email us at invest@boursefinancial.com. Well, have yourselves a very wonderful investing week. And Hima, it's back to you. This has been the Bourse Report.